Hello, ladies and gentlemen. Welcome back to the newest edition of Levalytics on Video. I am your host, Jordan, and for you, those of you who do not know me by Jordan, I go by Permable Nino in the Twitter sphere. For those of you who are subscribers, welcome back. For those of you who are new and watching this content for the first time, welcome to Levalytics on Video. And if you're finding the videos first, I also have a newsletter on Substack called levalytics.substack.com. So if you prefer the content in a written format, make sure to go check it out there. But otherwise, let's jump into the video and talk about what the topic of this week is. And some of this stuff is overlapping with the previous content that I've done, but the general theme is, equities are ripping. Once again, the crypto folk are getting pissy about it. And I think a lot of people are a little bit disappointed. And the reality is that crypto is not the shiniest object in the market anymore. There's a lot of other exciting things going on in global financial markets. However, there is something to be said, and this is my opinion, that for the time being, crypto and Bitcoin specifically, at least, is keeping decent track and running at a good pace right next to the equities markets. And that all things considered, I don't think crypto has really stepped on the gas yet. And the fact that it's keeping pace at a high level is encouraging. And that means that there is a moment where what you really care about in the thick of the context of the global financial markets, where everything is going into full send mode, right? You want those animal spirits. And more importantly, you want to be owning the assets that are the best performing within that subset, right? You want to own the strongest asset class, because if the animal spirits are everywhere in the markets and the markets are more interconnected than ever, right? Across crypto and TradFi, you want to own the strongest asset class. So if that comes to crypto, it's going to be a hell of a ride, right? Because, in the past, we've had alt seasons before. We've talked about this before on the videos and within the newsletter, and I talk about this a little bit on Twitter, is that it's been very difficult to have an alt season because there's so many assets in crypto right now, right? Over time, there's just been a huge token inflation with too many tokens across too many projects on too many chains, right? It's too difficult to keep track of everything. There's not enough capital and enough attention to be focused on enough of these things for a sustainable run to occur in crypto, right? That has been the major issue since 2021 probably, right? This last bull market, if you want to call this the bear market, was kind of underwhelming in that regard, right? And my opinion is that the entire global financial market going into animal spirits mode with crypto at deep value and possibly in a position to start outperforming the rest of global financial markets creates a possibly perfect storm for an explosive crypto rally. How long it lasts, I have no clue. However, my opinion is that we are at what could be the beginning of that rally, right? Crypto markets are up a good clip. Let's look at the chart right here. Bitcoin's up from 65K at the end of March to above 80K, right, at the beginning of May. So this has been a good run, but the reality is, look at this. There's not that many explosive candles here. For the most part, this has just been a grind up, right? This has just been a spot bid grinding this thing up. We've talked about the negative funding. We're going to keep talking about it because it is a big thing to pay attention to. But my opinion is that we are looking for expansion here, right? And I think there is a decent probability that above 80K, the next convincing move above 80K just releases a lot of the energy and pushes us back up to possibly 6-digit Bitcoin, right? I think this is the expansion zone, which is exactly why I put this on this chart, right? So right now we're just grinding above the bear's first wall, and I think this is the wall. This is the big one. I've talked about this before in previous videos too. The bear's second wall, I'm not sure how much this is going to be resistance. I think maybe we expand up there if we get the breakout, assuming we get the breakout. I'm wrong a lot, so you never know, but we get like a little sideways action maybe, and then we'll rip, right? It won't be like one of those things that I think goes like sideways for too long if it does though. But yeah, so that's kind of how I'm looking at the market right now in that regard. So another chart that I shared within the article, let's go to the watch list. Where is this thing? No, wrong. Hold on one second. Oh, I'm not watch list. I got to go to holdings. Here it is, right? This is the BTC versus the Qs chart, right? And it has basically been in a downtrend since pretty much like July of 2025, July, August, whatever you want to call it. It has been in a downtrend for coming up on a year, not a year, but we'll call it like 9 months at this point. It's been down only, right? And as you know, with my momentum indicator, which is on the dudeterminal.com website, which is where not all, most of my charts are hosted. And I have a bunch of more charts I need to push up in the coming week. Not in the coming, yeah, not in the coming week, this week. Blue is buy, red means sell. You want no part of it. It's a bear trend if it's red, and it's a bullish trend if it's blue. It's been kind of just crap price action for, it's actually been bad price action for BTC versus USD, let alone an asset like Qs, which is up a decent bit over the past year, right? So it's been down only, right? And what I'm looking at right here is that we've been sideways. BTC has been sideways versus Qs since the beginning of February, right? And this was not only a volatile period for crypto, this was also a volatile period for equities, this whole period from February until now, right? There's been a lot of shaking of the tree. People got shaken out of their positions in equities, and look and see what happened to them. They're left in the dust holding cash while the market's just ripped higher. And I think a lot of people would look at this chart and be discouraged, like, this still looks like ass, right? This is terrible. For me, the other point of view that I have is that there is a possible constructive story if you get a BTC divided by Q's price closing to new highs. And the reason why I think this way is because it's been a volatile period. It's been a very difficult period in financial markets. And the fact that BTC hasn't just broken down convincingly, right, from like 113 down to wherever, I don't know, the next new lows down here, it's sideways. It's not even trading at the lows. It's probably trading towards like what would be considered the middle of the range. So this is really healthy for the time being. And I think that there is a possibility where it's a very obvious extra risk on event, because I'm already risk on with BTC, right? Like, if you look at the price, it's blue, so buy blue. You might get a buy blue on this BTC versus Qs, which is BTC versus equities, right? So that is something I'm also paying attention to moving forward. And that is basically the crux of this article, is explaining that the Qs are in the middle of an explosive move, right, for their historical standards, whereas BTC and crypto is just grinding up, right? And what does that tell you? If BTC is sideways and keeping pace with equities while all this craziness is going on, keep in mind, the craziness could go on for way longer, especially in the short to medium term, than we realize, right? And this could end up just breaking down. But my opinion is that, considering BTC is keeping track with equities, and equities are having a historic move up right now, which I'll share a few charts about this just so you get a real feel for what I mean by that. And BTC is just grinding its way up, just sideways, keeping pace with it. It really makes me think that there's a possibility that when BTC turns on the boosters, it'll be a global risk-on event, right? It won't just be the crypto folks paying attention, and that it'll be a signal that'll catch a lot of people's attention. Be like, oh, I guess Bitcoin and crypto's joining the party now. And everybody knows this is why people stay in crypto, outside of like loving the tech. There's we all have like a soft spot for the tech and whatnot, but in terms from the financial perspective, I think the volatility is for why a big reason why a lot of the people come to the asset class, or have come to the asset class historically, despite the fact that, I've talked about in recent years that volatility has actually kind of died off relative to equities. The gap has closed a little bit. But yeah, this close above 124 here, 125, new range, like breaking out of the range, the upside would be a major bullish signal, in my opinion, given how crazy the past few months have been, and BTC still has not broken down. But yeah, let's keep moving forward into a new chart. So this is SMH, which is I think the most popular and largest semiconductors ETF. And the blue line is the 22-day returns, which is basically 22 business days in a month, right? That's the logic behind it. So it's basically just the monthly percentage returns of the SMH ETF. And the data goes all the way back to June 2000. The black line is the SMH price, right? And the idea behind this is to show you guys that this is truly, truly a historic run, right? The fact that, what is SMH up? How much is it up? Up like 39% over the past month, breaking to new highs, right? This is a crazy, crazy run. And keep in mind, another thing that you can look at also, if you want to zoom in a bit, let's do this. I want to give you guys another look here so you can understand, what just happened, right? Because, remember, this whole rip upwards is after a huge fake out from the Iran war. Equities just have a tendency to mean revert whenever they go, the red lines show two standard deviations outside the mean to the upside and to the downside, right? So whenever you get these moves that are sharp to the down, just because equities, I don't know where it comes from, obviously it comes from the world just pouring their money into American financial markets, right? But we had this move at end of March, right, when SMH dipped on the whole Iran scare and everything. It's just ripped up only from there, right? And this happens a lot. It happened down here. It happened down here. So you can track these simple mean reverting situations where these bands, and keep in mind, this is on the doterminal.com website. If you go to the stock market stuff and you check on the indices data, you can get good bounces out of this stuff, right? Here's another opportunity, right? So it's just ripping, right? And as you can see, we're zoomed in here and it's 39% over the past month. So let's pop back out and I'm going to drag this back down, get the chart going to the upside. Here we go. But you can see, right, this is one of the largest historical values. I think the last time that it had a move this big over a monthly span is November 2002, which is what, after the dot-com bubble crash is, right? Something along those lines. So this is very different than this bounce, though, right? Usually this bounce in 2002 was after the market drew down a lot. The price went from 16 down to 8, a 50% drawdown, and then it bounced, right? That's like kind of just like a big mean reverting bounce. In this situation, what's going on today, this ripped to new highs, right? This is like just in the thick of a bull trend, whereas this is a mean reverting bounce in a downtrend. So this is a historical move for what's going on in this corner of equities. And this is like kind of similar to what you're seeing in the rest of the equities markets. There's just a lot of volatility. I think because there's a lot of cool tech out there, and the world also has the geopolitics. There's just constant new things going on, and the rate of change is just, I think, increasing, right? And I think that's why people are pricing in more volatility, and the reason why these assets, the stock market's starting to trade more and more like crypto. So yeah, this has just been a historic rally, and I'm not a keep in mind, I'm not like, I don't have as much experience doing analysis of stock markets as I do with crypto, but this is giving animal spirits. Whenever volatility starts getting a little bit crazy, you're in an expansion period. And during expansion, you either get large accumulation or large distribution. People are going to be selling into this, and you want to make sure you sell on the way up. However, like I said, this appetite, this energy bleeds into all financial markets. And it happens to be that crypto was already well situated, even when it was trading at the lows and wasn't exciting. But I think the fact that crypto is now starting to trade upwards and has a lot of momentum without actually trading with lots of volatility quite yet relative to what it can do is very, very exciting, right? So like I said, this is one thing to keep in mind. The equity markets are just like stepping on the gas. And I'll show you one more chart related to SMH. This is the SMH cumulative amount of dollars that have gone into it since 2017, because the API that I use only goes back to 2017, right? There's no specific reason. So I'm not getting cute or anything. It just happens to be that the API I use, this endpoint, only allows for data back to 2017, right? So as of today, this value is 16 billion. However, let's go back 1 year ago, which is May 2025, and the value was 4.92 billion, right around 5, right? So the jump went from 5 to 16 billion. It's like around $10 billion have been lumped into this thing, right? If you compare that to the rest of the chart, right, the fact that the total amount is 16 billion and 10 of it came over the last year just tells you everything you need to know about why this price chart has just been ripping. You have been fighting the current if you are trying to fade this. And that's kind of what's been going on in global financial markets. Just money's been piling in, pushing these things higher. So yeah, there's a lot of money sloshing around right now. And that's something to think about, something to pay attention to. And people are always looking for relative value, right? And we've talked about this before. You saw the chart about the BTC and Qs, right? This is relative value. BTC is very cheap compared to equities right now. It's down almost 50% basically, right, from the highs. So that's another thing people are paying attention to, which is why if this ends up breaking out to the upside, people are gonna be like, oh shit, here's the next like knock-on trade that we can make and rotate profits into. It's the same thing that's always happened in crypto too, right? You like back in the day, you used to buy BTC, then you would it would lead, and then ETH would start pumping. You'd sell it into ETH, and ETH would pump. And then after ETH finishes pumping, the capital rotates into alts. You rotate into alts, and alts have a blow off top, and you sell your shit into cash, basically, right? We are kind of starting to. It feels like we're kind of starting to jump into that mode a little bit, but across asset classes. And I think you see a lot of this with the talking pundits on Twitter for the popular influencers who are good traders, talking about not just crypto anymore, right? It's all just one big bucket, and because it's all easily accessible. Equities are coming on chain. You see Hyperliquid, you can trade whatever you can trade. Saw people trading the oil stuff during the Iran crisis. Yeah, there's just a lot of action going on, a lot of money sloshing around, a lot of volatility, right? So all these things are going on, and in the meantime, crypto is just grinding higher, right? It is not making a ton of noise. There are some select assets that have ripped a lot, right? For example, Venice AI, that's like one that has just gone crazy, and I've unfortunately bought it a few times with the Levalytics money, but I just puked it. It's just because it's been trading a bit weird and it's super volatile. It's just like a difficult position to size into once it's already made the move that it has, So, well, I think there's a decent chance I probably won't be trading it again for a while, and I'm just kind of an observer and an enjoyer from the sidelines, being like, oh, nice, like there's signs of life in crypto. But yeah, you can see a bunch of money's come in, right? The dollar flows are vertical here. This is a gigantic move if you compare it to the past 10 years, right? Going back to 2017. So now we're into the crypto bit of this, right? So this chart shows the 3-month return for all perpetual swap pairs on Bybit, which is 500 plus perpetual swap pairs. Some of them are like repeating, like it'll be like, for example, ETH USDT and ETH USDC. So it's like not exactly like 500 alt pairs, but it's like hundreds of alt pairs at least, right? So there's a lot of large body of data going into this number down here, which the blue line is the 3-month return, right? So you can see on the way down, we had a few moments where we got historically oversold levels. And these lines below the green and above the red are top 100 instances ever, right? These are using daily candles. So top 100 days of 90-day returns. So this is one of the lowest 100 values ever, right? And all these other green ones are the same thing, right? And you can see also it has a pretty good history of nailing when things are getting a bit overheated on a 90-day span, right? You got it here, July 2024. You got it March 2025. You actually got it at the end of 2025, which, for those who have been following along from the early days of the newsletter, back then I was like, this seemed capitulatory. But there were other signs that we were just not done there, that kind of kicked in over here, that there was a lot of leverage in the system and people were holding on to longs. And the second price action starts breaking down, when it's obvious that people are holding on to the positions, you need to be nervous. But I don't have that chart included in today's video or article, so we can talk about that another time. I share it a lot. It's some of these charts you go back to a lot just because you're like, this is quality, this gives me good signal, and the data and the circumstances just change. So you make sure you stick to the analysis and your execution plan along the way. But you can see we got one more bottom print at the beginning of February. But down here you can see, right, what is the value? Around 33, 36%, something like that, right? We haven't even reached this fun zone, right, where things get crazy. What we're actually back at is the values we had up here at the market top, 2025. Obviously, we don't have the same type of same stuff going on under the hood related to like funding, open interest, all these different things, right? It's much healthier now, but we have not really reached what I call proper crypto fund mode. Over a 90-day span, this is not that impressive by crypto standards. Hold on one second. I think around 57% is the value up here. Around 55 to 60% is considered a top 100 value, right? So that's we're not there. We have wood to chop. So we are not in full-blown overheated full send mode on a 90-day basis. So I think what will push us into this upper range, though, right? What's going to get us up into these upper values, what's going to get that done is a large expansion move that I've talked about, right? This large expansion move here, this arrow where volatility finally kicks in, shorts get liquidated, a lot of force buying going on, price goes vertical for a second, BTC sucks the air out of the room, and then after that there will be a follow-on act by altcoins probably, where things start just, instead of printing these like steady candles. Hold on one second, I'll take you to another chart. On-chain shitters. think virtual is a good example of this. Like this is just not that crazy a price action for virtual, right? AI coins trade with a lot more volatility. 8% candles. When AI coins are ripping, it is going to be more than an 8% candle, right? So we're just not there yet. Volatility just truly has not kicked in yet. And I think that's the price action unironically, I think we'll get once we get up into this area. Once we get like, oh, everyone's in a lot of profit, let's start. That's when people are like, oh, this thing's up a lot, I want to buy more, or new people get excited and they're like, I missed out, I have to lever up and start punching this thing higher, right? So this is when things get crazy. Right now, this is the quiet climb, is what I would say. This has just been a quiet climb while the rest of the attention is on other markets. Okay, so I've shared this chart with you guys before as well. This shows Bitcoin's perpetual swap funding rank versus all other perpetual swap pairs on Bybit. And lower values mean that Bitcoin's rank is lower, right? This 25 here in November 2022 means that 75% of perpetual swap pairs on Bybit have a higher funding rate than BTC USDT, right? And a value that's high, like 78 here, means that BTC's funding rate is higher than 78% of other perpetual swap pairs on Bybit, right? So we want low values. Low values is where you get bottoms, right? November 2022, bottom. You got it here. September 2023, value got down to 31%. This was 24%. Another bottom though, right? You had another one here, September 2024, right? And the value got as low as 29%, bottom, right? Down here, we are all the way at 19%. This is the lowest value in this data set. And keep in mind, back then and these days in 2021, 2022, Bybit was a relatively new exchange. There weren't that many perpetual swap pairs listed. So this has significant signal, right? This data point is in the thick of 500 plus perpetual swap pair data points. So the BTC funding rate is in the absolute gutter, which tells you that there's either a lot of shorting going on or there's a spot bid or a combination of the two. The easiest thing you can do, you don't really need to obsess over one or the other, in my opinion. What you really need to pay attention to is like, what is it? Is it negative? If it's negative, you can assume it's a combination of the two, right? I mean, that's what it is. There's at a minimum some sort of combination of the two going on. Yeah, so this is really bullish, right? And when you get an expansion move, right, we're focused on the expansion because, like I said, BTC has not stepped on the gas yet. Neither have altcoins. The crypto markets in general have not stepped on the gas. So for example, here, right, there's an expansion move to the upside as price broke out, right? January 2023, boom, expansion. Here, October 2023, expansion. October going into November, expansion, right? This is all expansion. July 2025, when we were just kind of like floating around the top. This was a big bearish signal when you had this much expansion going on with the BTC funding rate versus other funding rates, and the price is just not breaking into new highs. That's super bearish looking back on it. Obviously I didn't have this metric at the time and I couldn't look at it, but that's just, when you're getting expansion moves in funding rates, you want price action to be following through with that. Otherwise, it means there is a lot of longs just complacently sitting in their positions at the top. It's very bearish, right? You do not want that. And the only time it finally unwound was once we got this huge liquidation event up here, right? October. So so now we have the opposite. This is mega bullish, the lowest value ever, right? And this data goes all the way back to May 2021, so 5 years exactly. And the price is just grinding higher. So we have not had the expansion move yet. We are just grinding up quietly. And like I said, BTC is keeping up with stocks. Don't let people convince you otherwise. Maybe there's small sectors like SMH where it's underperforming a bit, but that's because BTC has not even started sprinting yet. It is jogging. This is a light jog. So yeah, this looks really good. And then this next chart looks kind of similar, right? This chart shows the percentage of the time funding rate is negative for Bitcoin, right? And as you can see, March 2025, April 2025, like this whole area down here, this is when the values are high, right? This means a high percentage of the time funding has been negative. Expansion, it goes down, right? As price goes up, and then it stops here, August 2025, right? So price goes up, expansion downwards, right? This means that funding is more positive a higher percent of the time. You can even see during here in December 2023, this whole window where the price just ran up, you can see it's just zero. BTC funding rate was basically positive the entire time. So once again, you can see it here, December 2022. a high percentage of the time funding rate was negative for BTC. Price breaks out, expansion, right? We are still climbing. This is still the wind up before this thing snaps and there's an explosive move, right? So the fun has not even begun. So, I'm sure there's people looking around, looking at price charts, thinking, I missed it. For some assets, maybe you did. Like there are things like Zcash, I would not start buying it now at these highs after it's already kind of made an explosive move to the upside near the top of the range that it hit at the end of 2025. I wouldn't do it for Venice. Maybe some people will know how to do it and trade that easier with size while also managing risk. I think it's very difficult. But the idea, though, for crypto in general is that it's still early. This is early. This is the wind up. This is the build up. This is exactly what you want to see. You want to see BTC keeping pace with equities while this is going on, because inevitably the move will be explosive. And the number one thing that happens, like we said, when the move is explosive, it brings all the attention. People love the volatility. That's why people won't shut up about equities right now. It's because of the volatility. They're talking about, oh, the tech's all good. There's all these rotations. You make sure you hit all of them. It feels like crypto all over again. When we've talked, if you've been through a crypto cycle, you've seen when the price rips that everyone won't stop talking about, oh, if you don't hit every single rotation, you're a loser. That's exactly what's going on in equities right now. So, this quiet buildup is exactly what you like to see while BTC is tracking. Okay, so here, this shows the percentage of perpetual swap pairs on Bybit that have funding greater than the default flat value. And you can see during big run-ups, you get very elevated values. You had this happen after the BTC ETF got approved, right? So starting at the beginning of November right here, this is when you started getting elevated values. And elevated values are just usually when, chaos is kicking in, right? This is when people are going crazy, getting super long, trading alts, and this is usually when the excess builds up, right? So right now, these values over here, what are we at, like 10%? 10% of perpetual swap pairs have funding rate higher than flat. This is relatively tame still. This market basically died after the presidential election in 2024, right? You didn't really ever get many spikes even on the second leg up. It was basically a fake double top. We just haven't really, the animal spirits have not returned. So this is exactly what you like to see. So how will you know we are in a moment of expansion? This will rip upwards, right? We will go back to times when 65% of pairs, like here, for example, have high funding. So it is still relatively early. These are altcoins. This is telling you what percent of altcoins have high funding rates, and it's just not much right now. There's just not much to be nervous about here, and there's not been expansion. There's not been froth kicking in because the attention is not here. And nonetheless, alts and BTC are like kind of moving up at a healthy clip if you're holding and paying attention to the right stuff. And then this is the final piece of evidence that we just really have not had the bout of volatility since 2024, since the presidential election. This has been 30-day rolling volatility for altcoins, right? It's just been trending downwards. We haven't even got like an expansion move. The last big expansion moves we had were on these big rips downwards at the end of November around Thanksgiving, and then around February 5th, right? But it's still just trending down. It's still going downwards. My guess is that if there is some real strength to this move and a lot of people are off sides and alts just make a run for it, I think this move is going to be huge. It's going to rip, right? And we just haven't had it yet. We're still in a downtrend. So there's just all the signals there, right? And like I said, this is a very healthy market. I think there's a lot of good going on under the hood here. So should you be nervous about crypto underperforming equities by just a little bit right now? I'm not particularly. However, how would I know I'm wrong? Let me just tell you that, actually. That might be worthwhile just so people don't come for my head if I'm wrong, because I'm wrong plenty of times. But I'm just sharing the evidence that I have with you guys. If this breaks the new lows down here, right? If BTC versus Qs breaks down, then I'd be like, okay, I'm wrong. That's probably my signal. Okay, you got something wrong here. Crypto's never going to be the fastest horse. There's not going to be the rotation that you thought was going to happen, and it's time to kind of move on and change the game plan. But yeah, we'll have to see. I'm not sure if that occurs if crypto breaks down. I'm not really sure. But this all looks good. Like I said, the market's been climbing up. It's been looking healthy, and we haven't even had high funding or lots of volatility kick in yet. So it is still early innings, in my opinion. So now here is the Levellytics portfolio. You can see it is 48% Bitcoin right now, right? 48% Bitcoin. The rest of it is altcoins. The biggest positions are virtual and Zcash, right? Just because I want the exposure to AI. In the Zcash like is just the coin of the hour right now, right? Then I have Arrow Pendle, which is good DeFi exposure, and then the rest is meme coins. And meme coins just have a lot of volatility, so it's like 10% of the portfolio is in meme coins. And obviously, if I'm wrong about the market, I will get stopped out on these and probably lose more than I would be excited about. Right. The good news is that not this. The good news is that the book's up a good bit, right? So now you can see the purple line at the top, which shows the amount of money the Levellytics portfolio needs to make to get back to break even, and it's 30%. A month ago, it was 45%. So things are climbing, and the ITD return, the inception to date, right, since October 1st, since Levellytics launched, which obviously we marked the global top. You're welcome. The return is minus 23%, right? And the BTC return since we launched Levellytics is minus 31, and then all the median return of altcoins that we've traded is minus 55%. So we've outperformed alts, we've outperformed BTC, and we got long just in time. This is area where we got this little gap is when we finally made the plunge to go 100% long into crypto. We'll find out if that's a good decision, but we, as we discussed in this video, we think we have plenty of reason to think that the crypto market is extremely healthy, and that if you are not bullish, you're offsides. Obviously, always room to be wrong. Wrong all the time. I was wrong, and you don't go down 30%. At the lows we were down. Levellytics was down like 31, 32% at the worst. You don't go down 31, 32% being right. But yeah, we're feeling good about this. We feel comfortable with the exposure. We think that the market is healthy right now, and the positions that we've added over the past week are Farcoin, Pendle, Pepe, and virtual, right? The virtual position we increased in size by 208%. The Fartcoin position, Pendle, and Pepe are all new positions, right? And then some of this money came out of the BTC bag. A large chunk of the portfolio was in BTC before, but the position we decreased it by 16% so we could feed some of these smaller positions. And yeah, I think that's it for this week, though, you guys. I really appreciate you guys tuning in. If you have any questions, feel free to drop them in the comments. As I've said before, make sure to go to dudeterminal.com or levellytics.substack.com. If you have any input on the video, or if you want to see more of the content, there's a lot out there at this point. I've been doing this since October, twice a week pretty much. I would say the content over the past couple months has probably been the best stuff because it also includes video. Otherwise, guys, good luck out there. Stay safe. Have a great week, and I'll see you guys back here on Friday. Thanks.